Okay, subscribers, welcome back. I hope everyone's riding the money train with me this morning. We have more selling coming. So again, if you're new to the channel, we cover technical analysis of the charts and trade ideas. And the most recent trade idea that we've really been on is shorting the market. We've been shorting it really since January 4th. So this entire correction so far we've caught. And if you really look at the triple Qs here, which is the tech sector, we've now, we're now wiping out the gains from 2021, going all the way back to the March, February timeframe. So, not quite half the gains have been given back, but almost half those gains have been given back just about in about 2.5 months worth of time. Okay, so zooming in on triple Qs, guys, you'll see here on the daily chart, we're back down at the lows where we previously bounced at, right in here. This was that big impulsive kind of reversal day where a lot of people thought the bottom was in. I saw channels like Meet Kevin talking about how he bought the dip right here and how this was, this is where he re-entered half his position right there. Well, so far giving it back. I suspect if that's true that he bought the dip right there, he's probably getting ready to sell and just break even, get out with a break even. He might hold for a small loss, but the point being is we're back at the area. We really have no business being back down here. If this was a true reversal, then we really shouldn't be back down here. So again, we are in a downtrend. It is sell the rip market. And I keep putting out thumbnail videos saying it's sell the rip because there's no indication that we haven't changed. Now we do have bullish divergence on the momentum indicators that still remains. Okay, so that has not been taken out. Now, that doesn't mean that it's, you want to go long just because you have bullish divergence. It just indicates that, okay, the conditions are there for a trend reversal, but we need to see some more signs in terms of breaking trendline resistance or reversal candlesticks, something. Even this big impulsive buying candle right here on the triple Qs was not a reversal candlestick. It didn't close above the previous highs to give you that bullish engulfing candle. We didn't get that. So it was just a sell the rip, and so far that's what they're doing. So again, moving out, looking to take out the lows and move down to our next profit target of about 300 in triple Qs. That still looks intact. From where we're at now, that's a move of about another 6.5% or so. Now again, this is not the objective area to short. You don't want to just short as you're plunging. A lot of people don't want to short on the rallies, that when it's ripping like this, they don't want to short. They want to go long. And then when it's selling off, they want to short. Again, you don't want to let price action just dictate your emotions. When things are going up, you don't want to be buying, and things are going down, you don't want to be selling. That's how retail trades, all right? So for the most part, you can do that, but you need technical indicators to show you why you're taking a trade, not just price action. So it looks like we're heading lower from here. I'm not sure if it's going to be today. We've got the Fed coming up on Wednesday, so who knows. But I think there's a high likelihood we're going to sell off into the Fed, just continue selling down into the Fed, and then the Fed is going to be, we might hit our profit targets right before the Fed or right shortly thereafter. The S&P 500, the SPY, again, we're in a downtrend. Now the lows are right down here at about 411, so we've got to go to take those out. You take those out, we should head down to the next level of about 400. Okay, that's the next profit target. Again, we do have bullish divergence. That remains. If you see those divergences get taken out, meaning we make a new low and it looks like that, that's going to be extremely bearish, and it's going to probably just be another indication that we are entering a bear market. Again, I think we are entering a bear market, just in my opinion. And if you look at the SPY from the highs to where we're at now, we're down about 13%. On the Qs, we are down over 20%. We are down 22%. So the tech sector is in a bear market. And again, the tech sector is basically they have the largest market cap, the tech stocks, the FANG stocks per se. Another one I want to point out is Apple. Apple today gapped down below the 200-day moving average. And you can see here on the hourly chart, we opened today below the 200-day, and this is the first time that it's been below the 200-day in a long time. They rallied it up, made it look like it was going to recover. They tried to recover right here, and boom, sellers smashed it down. So recognize the price action. Gapping below the 200, trying to recover, getting rejected. That's bearish. So looking at the daily chart here, You can see we haven't really been below the 200-day since back here for 1 day. And, you know, we've got signs showing up that we are entering a bear market. Again, if you look at all the FANG stocks, they're now all underneath the 200-day. Here's Amazon under the 200-day. Google under the 200-day right there. Facebook's well under the 200-day. Microsoft under the 200-day, and now Apple, which was the last holdout, is now under the 200-day as of today as well. So all the major FANGs under the 200-day moving average. That's just the generals of the market that were really holding the market up are now breaking down. All right, so that's bearish. Moving on, IWM small caps. Now IWM's been flagging out. We've got this flag pattern right here. I think we're about to resolve to the downside. Target right now is about 173 down to 170. Anywhere in this range, we get down there, that's about our profit target. You can lower your stops, you know, have a trailing stop. Maybe we just plunge right through and shoot through and then snap back and recover. I would expect some sort of a reaction there and some support. You can see good support. That was former resistance back in 2018, also back in 2020. That range is where the buyer should be waiting for a longer term rally. But again, IWM will be in a bear market, and it's actually down 20.5% right now. So it technically is in a bear market, and by the time we get down here, probably down 30%. That's about the time where you could expect a bear market rally. Again, bear markets don't just crash, all right? We walk our way down, we follow the slope of hope. So we kind of run down, then you have a nice strong rally, and that keeps people long and in the trade. So we'll continue to look for that, but as of right now, I think we're heading lower. Moving on. Qualcomm. So Qualcomm's coming close to a near-term profit target. Here's this gap right here I pointed out a while ago. We've been in this trade for a while, but again, you know, as long as the trade and the technicals don't change, we stick with the trade. Today we're selling down, running down, looking about to fill the gap. 139 is about gap fill. I would expect the buyers to probably step in a little bit early and this thing doesn't actually gap fill. But it might, you know, but again, I would expect the buyers to probably step in a little early. So for the near term, you might, you know, this is a potential profit target as we come up to that level. And, you know, I'm probably going to take some profit here. Maybe we get a bounce back where you can reshort the thing. But for now, you know, it's looking good. And again, we shorted this thing way up here at resistance, so it's already profitable by about 25%. When it's all said and done, it'll be about a 30% profit, so it's looking good. PANW, all right, another one that's continuing to work. We shorted it right up here. Again, if you've been with me for a while, you know, over the last week or two, I've outlined this trade step by step. You know, every day I've covered this. I told you guys exactly where I was going to short at, exactly where I'm expecting it to go, and exactly where I'm expecting to take profit. All right, so profit right now is going to be on this trend line right there. We are heading straight down. We might get there today. All right, maybe we do, maybe we don't, but trend line support is right there on the daily. You can see all the reactions. So I would expect at least a minor reaction, probably bounce. And then the next sell signal is a break of that trend line, a nice impulsive break. You got the 200-day underneath as well. So if you break the 200, you're probably going to, or break the trend line, you're going to likely head down to the 200, and that's where you'll probably get a bounce. But these are all things to watch. All right. First profit target's right at that trend line. And, you know, we entered the trade right back in this area. So far it's profitable by about 11.5%. Moving on. SOXX, this is your semiconductors. So that, you know, this includes Qualcomm and a few others. Again, we are breaking support today. So this is another sell signal. Again, we had our original sell signal. You know, there's a lot of sell signals that have been on this thing, but you know, when we broke down and recovered back within this big bearish rising wedge, that was a sell signal. And then when you broke the bottom support right here, that was a sell signal as well. Now, recently we've set up some support right there at about 433, you know, we'll call it 433, 40 or 50. Bounced off that a couple times. There was a reaction. They tried to hold it there. Broke it briefly, but they recovered it. And I talked about that. See how it broke, but then they recovered it? And I said the next time it breaks, it's probably the real deal. Well, here it is today, all right? So there is, that's so far it's impulsive, selling off nice and impulsively. And this looks like the real deal. So likely, as long as this holds and they don't snap it back and recover this area, then we should head down to the next area of support, which I don't see really good support, decent support till about 388. All right, so I like that. Moving on. Okay, TSM, Taiwan Semiconductor. Again, you had resistance right here, or support right in here, 107.87. Our sell signal came back a couple days ago at when we broke 108 right there. All right, there's your sell signal. So you come down, you back test. We didn't even get all the way up to a full back test, and it's already rolling over pretty impulsively as well. So down we go. Next level of support. You've got, there's a little gap to fill right here. So maybe that might be minor support on that gap, but pretty minor support. I don't see it as anything major. Better support down here at 76.24, okay? Should get a reaction right there. That's probably the first target. And then, good support as well down here at 60.60. So those are key levels to watch. I think we're going lower. I like it for continuation to the downside. Moving on. Okay, GameStop. So we've been shorting this one for a while, really going back here. I think I shorted it on January 6th, I believe. And again, we broke support right then and there, back test, and now we're just rolling over. And look at the selling. It's getting more and more impulsive. This is going to turn into panic selling really quick. So this thing should just start to dump. Probably close pretty big down today and tomorrow. Again, we're looking at profit target at about down here at about 30, about 40 to 45, somewhere right in there. We'll probably get a somewhat of a bounce. So that's our profit target for now. And if we get that from when we shorted it, it's going to be a move of about 70%. All right. So far, it's very profitable. We're looking at about 38% profit. And yeah, I don't see anything but more downside in this one. Tesla, one of the last kind of holdouts. Tesla and Apple have been relatively strong. Now, Tesla is down from the highs. It's down about 40%. But again, you have to look at, it's all relative to how far this thing ran up. All right, this thing ran up massively back in 2020 and 2021. So to be down that much is really not that much. I'm looking for a lot more downside. So on Tesla, I've got some support right here at about 780. All right, there was a former reaction high there. We had a little bit of reaction right in there. We held support right there and a little reaction right there. We're breaking it today with another sell signal. So as long as you get a nice impulsive sell off, and the lower the better, the more it sells off, and the bigger the red candle, the better, then that should set us up for a move. Really, I don't see any support, decent support on Tesla till about 552.50. All right, there's good support down there. So I suspect if we get that sell signal, it's going to be a relatively swift move down. All right, moving on. Okay, gold and the gold miners. So some of the gold miners, I actually exited some of my gold miners, Barrick Gold. I took some profit, as well as Agnico Eagle. And I still have some of my other gold miners, but they look like they were going to pull back. But I'm getting a little bit of mixed signals. So on gold right now, we are right at trendline support. If you look at the hourly chart, this is the uptrend that gold bullion has been in. All right, we're at trendline support, and there it is, a perfect tag of that right now. So that would be the area to buy at. Okay, it is an objective long. We did have negative divergence on the hourly right there, so that was a divergent high right up here, and that's why it made sense to probably take some profit. Now we've come down to trendline support, so we've pulled back, we've hit trendline support. That's probably enough for that divergence on the hourly chart. But the miners look like they could be pulling back a little bit more. So okay, GDX. So GDX has a congruent uptrend line similar to gold bullion, but we are getting a breakdown today, breaking that trend. Not super impulsive if I look at the hourly, but the more it sells off, the more it's going to be a short-term sell signal. All right. Where do we pull back to? I mean, remember, the miners and gold is in a bull market, so it's by the dip, at least for right now. So I see this level, about 35.04 as decent support. Lots of reactions of resistance right there. So that's probably the area where I'd want to step back in. And if you see that, then you might want to look around the various miners that you're interested in, make sure that you're near a relevant support line as well. But we could be getting a short-term pullback in the miners down to some support levels. Coffee, Joe, is coming down to near-term support. So again, commodities are in a bull market. Here's your former resistance. It's about 58.64. Resistance, resistance, resistance. And we're heading down there probably to tag that as support. The 200 day is right below. So you might get a spike through and hit the 200 day and recover. If you see that, that would be bullish. That would be a buy signal. Or you could just step in and buy at support. Again, in a bull market, and should hold somewhere right in there. Moving on. Well, actually, I think I've covered about everything. So again, not a lot of new trade ideas in this video. All these trade ideas are ones that we've been covering for a while. But again, from the very beginning, I've pointed out the setups, talked about these day in and day out. And now that they're starting to play out, we're just going to keep updating those as we approach our profit targets. All right, so guys, drop me a thumbs up. If you're new to the channel and you want to learn about technical analysis, you want to learn this skill set, and not just follow videos, again, take my technical analysis course. I priced it appropriately, so it's affordable for all. And that will help you build the skills needed to find your own trade ideas so you don't have to rely on my videos. Because again, it's going to be really hard for me to point out the exact entries and the best trades in these videos. So take the course so you can learn this skill set for yourself. That's the most important thing. All right, guys, I will catch you guys on the next video. Bye.